if you are joining for this session. You may well have been with me, so some of the previous ones were in the middle of a series of lectures from the FI mock number 1. We've made our way to task number 5. If this is your first session, then please know that there are lectures available for each of the other tasks in this mock. You're very welcome to make your way through those too. My name is Anne and I'm one of the tax tutors here at First Intuition, and today I'm going to be taking you through Business Tax mock number 1, Finance Act 2024. Task number 5 covers the gains and losses in relation to companies that are disposing of shares. So that's where we're going to go next. Company share disposal issues and task number 5. So this task is worth 9 marks. It's going to be human marked. So you're going to be given like a blank grid to put your answer in. It's worth 9 marks, so 13.5 minutes on average to get this one done. So looking at the task briefing, you're going to need to be able to calculate gains and losses in relation to shares, which includes applying the matching rules and knowing how to deal with bonus issues, rights issues and indexation. I'm not going to review the task briefing in detail. If that little summary there scares you a little bit and you think, I don't really remember much about any of those things, you might like to review this task briefing before you go any further. You can just pause this recording and come back to it later. All right, so I'm going to get straight into the example with you, and I'm not surprised here to see that David Limited, because this is a question on company share disposal issues, bought 8,500 shares in Hartley in October 2001. August 05 there was a bonus issue, then David sold some shares, then there was a rights issue, and then David sold some shares. So basically a lot going on is the gist of that. And then a whole series of indexation factors in the live assessment. You'll probably be given more than you actually need, so it's a case of picking out the ones that are the correct ones. So my approach to this then, firstly might be to look at the requirement, complete the share pool, show the balance of shares carried forward and show your answer to the nearest pound. So why is it only asking for a share pool? Is my first question. What about anything that happened on the same day? What about anything that happened in the previous 9 days? If I'm looking at a shares question, they're the sorts of questions I need to be asking. So I'm assuming probably nothing happened there. But what I'm going to do is draw myself a little timeline so I can actually see what happened when. That's often my approach to starting these questions, put together a timeline. So we start off with 8,500 shares being purchased in October 01. So that's my starting point. Then we move on to the next thing, which is in August 05. There was a bonus issue of 1 for 4. So 8,500 shares, but then one new one for every 4 I've already got. So the working there would be 8,500 shares. Let me just move that working down a bit actually. It would be the 8,500 shares that I currently own, and then I'd say one new one for every 4 I've already got. So the rights issue expressed as 1 to 4 becomes 1 over 4 in my calculation. So that tells me that I'm buying an extra 2,125 shares at that point. Oh, it's a bonus issue. I'm not buying them. I am receiving them for free. So that is a bonus issue there. So they're free shares. Then David sold some shares in September 08. So we have a disposal. 3,500 shares were sold there. And in November 2010, there was a 1 for 5 rights issue. back to that. And then in January 2025, there was a sale again, a disposal of shares of 3,000 of them. Come back to that rights issue just now. Just wanted to say in terms of the disposals, there was the disposal in September 08 and there's a disposal now. It's only the disposal in my current tax year that I'm going to be interested in generally within these questions, and I was asked to just deal with the share pool. So I'm not actually doing the gains computation in this first part, I'm just doing the share pool. So the rights issue then. Why did I leave that? Well, the rights issue is 1 for 5. That means one new share for every 5 that you've already got. But I just need a little running total of how many shares I've got in order to be able to work that out. So I start off with 8,500 shares. I then have the bonus issue, which adds on another 2,125. Then I disposed of 3,500. So that means at the point that the rights issues happens, let's have a look, 8,500 plus the bonus issue minus the sale, 7,125 shares. So when I do my rights issue calculation, it's based on 7,125 shares, and they get one new one for every 5 that they own. So it would be an extra 1,425 shares. So whether you put all those workings in your timeline or not is entirely up to you. You don't actually need all of those. You could have just pointed out to yourself that there was a bonus issue, there was a disposal, and then there was a rights issue, and you could have left the actual figures till you got into the full computation. So that I will leave to you. The main things that I would like to see on this timeline would be the date and then what's happening. So the fact that there was a bonus issue, the date, the fact there was a disposal, the date, the fact there was a rights issue, the date, the fact there was a disposal. That's what I need to see primarily. But the more effort I go to here and the more detail I include, the less work there is to do later. Okay, now the biggest issue people tend to have with share disposals for companies with indexation is all the indexation factors. When do we index? When do we not index? And in a big share disposal question, that's quite a lot to keep in your head at once. So my method suggests we actually annotate our timeline and we make a note of whenever we're going to do the indexing. And we've almost then created a step-by-step guide for ourselves, and we simply have to follow those steps as we make our way through the question. So October 01, my first purchase. I'm going to index every time there is an event, could be adding shares or disposing of shares, where there's a cost involved. So if I buy more shares and I pay money for them, I'm going to index before I process that transaction. If I sell shares, I'm going to process the indexation before I deal with that transaction. So October 01, I buy shares. Next thing that happens is August 05. Now that's a bonus issue. That is free shares. So I actually skip past that. I don't do any indexation at that stage because there's no cost involved. Nothing is changing in my cost column. Bonus issue is not an indexing event. So I keep going till the next item, which is September 08, a disposal. Then I say, oh, that's an indexing event. That would change the column in the cost column. So before I can process it, I need to do some indexation allowance. And I'm going to index from the last time that I indexed right till now. But because this is the first indexation, there is no last time that I indexed. So when I come to do the indexation, thinking about the indexation then, now I've got this main timeline together. I just want to annotate it with the indexation factors. And the indexation is going to run from the very beginning until the next indexing event. And an indexing event is anything that affects the cost column in my share pool. Indexing event is anything that affects the cost column within the share pool. So we only index the share pool. So a few little notes about this. It applies to the share pool only. We index additions, so purchases. We index bonus issues because they're a purchase. We index before we do a disposal. So maybe a quicker way of learning this is we index everything apart from bonus issues. So we do our indexation before everything apart from a bonus issue. So as I look at this one, October 2001 is where I start. I've added 8,500 shares at that date. I'm now going to look forward until my next indexing event. The bonus issue is not an indexing event, so I skip straight past that and I keep going till my next event, which is September 2008. That involves a disposal of shares. That will mean that I am going to update the indexation before I process that disposal. So my indexation will run from the last time I indexed, or in this case, the beginning of the timeline, until September 08. So I'm looking for indexation from October 01, because the the bonus issue is effectively just ignored in the middle. I just forget it. It's like it's not there. So from October 01 all the way through till September 08. Then I look down my list of indexation factors, and thankfully I find that here. So the indexation allowance there is going to be 0.150. So I'll index to there, then I'll process a disposal in September 08. Then I'll move along and say, okay, the next thing that happens is a rights issue. That also is an indexing event. It also affects the cost. So I now need to index from September 08, which is the last time I indexed, till November 10. September 08 to November 10. And then move along again. January 25, the disposal happens, but before I get to that, December 2017, indexation was frozen. So I can't index beyond that point. So I'm going to index from November 2010, which is where I last indexed to, until December 17. November 10, December 17. There we go. And my feeling is, if you draw a timeline, something like this, with as much or a little detail as you need, you have done 90% of the thinking in this question. Because when you get into the middle of the share pool pro forma, it can be difficult to remember when to index. What am I doing now? What comes next? Do I index now or not? So by doing it before you even start the pro forma, and all I did to start with was on the timeline, make a list of what happened, that there was a bonus issue, then a disposal, then a rights issue. That part shouldn't be so difficult, especially if you don't bother with the numbers and you just say date, event, date, event. So date, purchase, the date, a bonus issue, the date, a disposal, the date, a rights issue, and so on. Then update it with the indexation. So what's the indexation factor and where does it happen? I now have instructions. So when I come to now fill in my share pool computation, I'm going to follow this like an instruction book, starting at the beginning here and making my way across. So the next part of my answer is going to follow that timeline precisely. And you will see I've got some headings filled in: the description, the number of shares that have been added or subtracted, the cost of those, and the index cost of those. And just a reminder that index cost means cost and then the indexation factor added together. So cost and indexation together, where of course the cost column is just a cost on its own. So first thing then, according to my little instruction line, October 2001, I purchased 8,500 shares. So that's the first thing that I'm going to update in here. Just going to call it purchase. It's 8,500 shares. Then I'm looking for information in the question about what those shares actually cost, and it tells me 89,400. So the 89,400 cost updates the cost column, and anything I put in the cost column goes in the index cost as well, but that column has indexation added to the cost. What next? Well, we're looking next for a bonus issue, because it's the next thing that actually happens in my timeline. So one by one I'm going to go through these and I'm going to tick them off as they're dealt with. So I've done the 8,500, done. Next thing I come to as I scoot along the timeline is a bonus issue. I know that there's no indexation before that, so I simply add on the extra 2,125 shares. So 1 for 4 bonus issue. Add the shares, but there's no cost because they are bonus shares. So the next thing I come to do is indexation, because that's the next thing in the timeline, following this through very precisely. So indexation comes next. Indexation of 0.150. So here, the question is, do I need a subtotal or not? And people sometimes get a little bit obsessed with these subtotals, but all I would say is, if in doubt, do one. If you're not sure if you need one, stick one in. You're not going to lose marks for doing too many subtotals. We actually don't need one here, because I always index the index cost column, and I can see quite clearly what the value in that column is. But if you'd prefer to do a subtotal before you do the indexation, that's not a problem. I'm not going to bother. I'm just going to index from October 01, which is the initial purchase, right through to, let's have a look, it's October 01 through to September 08, which is where the 1.5 comes from, or the 0.15 rather. So my indexation is going to be the indexation factor multiplied by the indexed cost. So I always index the indexed cost column. It doesn't affect the number of shares. It doesn't affect the cost of those shares. The only column that indexation affects is the indexed cost column. So I can get that added in. And then subtotal to here. Find out what's sitting in each column. So that's taken me through to September 08. It's very good 08, is it? There we go. It's taken me through to September 08, which is here. So I've done that indexation there. So I now need to work on the next thing, which is going to be the actual disposal. Sorry, I've deleted my timeline there by accident. There we go, that's better. There. So September 08, there was a disposal of 3,500 shares. That's where I'm going to go next. So perhaps even by this point you can start to see the benefit of having the timeline. It has taken away a lot of the thinking. I'm not always having to think, do I index now? What comes next? What was the next thing to happen? It's all there. So 3,500 shares have been disposed of. I now need to dispose of the equivalent cost of 3,500 shares and the equivalent index cost of those same things. So in September 08, a couple of different approaches to this. One approach is to say, well, I can see that there's a cost of £89,400 relating to 10,625 shares. So if I started by calculating the cost per share, as in the cost of one share, think of the per as being a divide. So I take the cost divided by the shares. So 89,400 divided by 10,625 shares would give me the cost of one share. I then take the answer to that and multiply by the number of shares that have actually been disposed of, which is 3,500 of them. So find the cost of one share, but I'm going to leave it in the calculator because it's some big or long number, multiplied by 3,500. To get the cost of the shares disposed of. An alternative method, very similar to what you do when you apportion overheads in management accounting in level 3, is just to say, well, I've got £89,400 and in proportions I want to get rid of 3,500 out of 10,625 shares. You're going to get to the same answer either way, so just choose the one that you think works better in your mind. I then repeat that exact method, but for the indexed cost. So I've got 29449 in there. And the index cost is 102,810. So 3,500 out of 10,625. £33,867 index cost. That can be deducted from my running total. And again, to avoid having to wonder, do I need a subtotal? Do I not need a subtotal? Sometimes it's easier just to stick one in. Indexation next then. But why? Because the timeline says so. Perhaps you can see at this point in the question, we've done the bonus issue, we've done the indexation, we've just done the disposal. Maybe by now our mind is starting to get a little bit frazzled because there's so many things going on. So we really don't want to have to do too much thinking. I want to just follow some instructions. And here are the instructions. Done the disposal, great, what next? Do the indexation. The factors there. You've worked it out, you've thought it through, just index 0.086. Multiplied by what? Well, the index cost. So whatever the index cost is what you are now going to index. Everything is rounded to the nearest pound, it said in this question. So I'm now completely up to date. Got my indexation in there. So the index cost column is looking good. I can subtotal again if I want to. It's not actually necessary, but if I wanted to, I wouldn't lose marks. And the reason it's not necessary is because the next thing that happens is that I just add more shares in. 1,425 of them. So I'm just going to go straight to that next. There was a rights issue, 1 for 5. So I add on the rights shares. Now these were shares that were purchased. Bonus shares are for free, rights issues I have to pay for. So these shares cost $8.25 each. So the cost of those gets added to the cost column as well as the indexed cost column. I can then subtotal everything. Remembering that you're adding things together here because we're adding shares in. So on my index cost column, I add on the indexation and I add on the number of shares. So you haven't done a separate little subtotal. You've got to remember to add in both those last couple of things to bring me down to the rights issue having been completed. Then I think, okay, what's next? Great news is the timeline tells us exactly what's next. You've just done that one. So next thing is December 17, indexation is frozen. So let's do that. So December 17, more indexation allowance, 0.284 multiplied by whatever is in your indexed cost column. Then another subtotal. Nearly there. Because when I consult my timeline again, I see that I'm on the final hurdle now because in January 2025, I make a disposal of 3,000 shares. So that's the final thing. January 25 is a disposal. $3,000 shares come out of that number of shares column. And whatever's left at the end is then the pool value that's to carry forward, because this is the end of the road. Maybe when I did this first disposal, I should reference that as working number 1. So my second disposal here can be working number 2, because to find the number of shares was easy, the question told me, but to find the cost and the index cost of those shares is a little bit more involved, but I'm going to follow the same method. So to find the cost of the shares disposed of, I'm going to take the cost that is sitting in my cost column, 71707, and I'm going to multiply by the 3,000 shares that I am disposing of as a proportion of the 8,550 that are in that column. So I'm taking 3,000 as a proportion of 8,550. I think that's the simplest way to lay it out. And it's very familiar because of management accounting and apportioning of overheads. Do the same again, but with the index cost column. So I need the index cost figure. So I'll just pick that up from the indexed cost column. and then I repeat the proportions, 3,000 shares out of 8,550. Then I've got the cost that's being disposed of here, and I've got the index cost as well. Oh, that doesn't look right, does it? Try that number again. So my index cost less the ones that have just been disposed of. That looks slightly better. So that's the pool value to carry forward. So as you can see, quite a lot going on there. What you'll probably find in this exam is some questions take you longer than the allocated time and some are shorter than the allocated time. And this is certainly one that has a lot to think about. It takes longer when we're doing it as a tutorial like this because we're explaining everything in detail as we go along. Much quicker if you just get on with it on your own, but nearly there. That was a share pool, which was the first thing I was asked for. In part B, for another 2 marks, calculate the gain or the allowable loss on the disposal of the shares in January 2025. This goes wrong a lot as well. It's not asking me anything about that September 08 disposal. It's asking me purely about the disposal that happened in January 2025. So when I'm dealing with a disposal, I need to have the proceeds less the index cost. So proceeds, less cost, less indexation, effectively. So the shortest way to do this, I'll show you the short way, then I'll show you the longer way. The short way would be proceeds less the indexed cost column, which is a cost and indexation added together. That would give me the gain. And as long as that does give me a gain, there's nothing wrong with that method. So the proceeds in this question were 3,000 shares sold for £63,900. The index cost figure to get a gain. So that's my gain, or indexed gain if you like, or we also call it the chargeable gain. So the only other thing to consider here is that indexation cannot create, nor indexation cannot increase a loss. So we can't create a loss, we can't increase a loss. So if you ended up with a loss on that last line, you'd have to change the format slightly. Only slightly. You would have to show proceeds of 63.9. You would then have to deduct the cost, which is the cost of the shares disposed of, 25,160, and that would then give you the unindexed cost, the unindexed gain, or that could be a loss. If that was a loss, I wouldn't do any indexation, I wouldn't put any in the computation because I can't make a bigger loss. If that's a gain, I'd then deduct the indexation after that, but I can only bring my gain down to 0. I can't use the indexation to create a loss. As it turns out, it is a gain. This was just an illustration of the slightly longer way of doing it if we need to. So the indexation, to find the indexation figure, I would take the index cost. Oh, sorry, in there, put the lines all over. I would take the index cost of 39,028. One last little working. Let's call it working 3. As we know, the index cost is made up of two things. It's the cost and the indexation allowance together. So if the index cost is 39,028 and the cost part of that is 25,170, what is indexation? It's got to be the difference, hasn't it? So I've deducted the cost on one line. I want to deduct the indexation separately on another. So the indexation would be 13868. So bear in mind that this working wasn't necessary here because we actually had a gain as opposed to a loss. But in questions where you maybe do have a loss, this is certainly something to consider. The overall result is going to be exactly the same, but I can't allow that final gain figure to show as a minus. We can't have indexation creating a loss. We can't have indexation increasing a loss. So longer way round if you end up with a chargeable loss instead of a gain. So there we have it. Quite a long one, that one. That was obviously a full-on computation dealing with the disposal of shares, so lots to think about in there, but an excellent question to practice. And I think that's one area where I'd say that that example covers a lot of what you need to know. So when we do things like adjustments to profits, then I have to say there's lots of other adjustments that you might come up against that you really ought to go away and revise. But with this one, I think if you can do this example, you can pretty much deal with the disposals of shares. There's not a lot more to it than we actually see in this example. So hopefully you'll join me for some of the other lectures. I'll be moving on to task 6 next.